do you found so quickly at a young age this passion of yours of moving
It
capital?
was an evolution, originally it started out of pure fear and scarcity and need and desire for freedom. I realized when I was 7 years old, I met this very wealthy family and they had a beautiful home and a beautiful marriage and they loved each other and they had horses. And then I went back to my house and God bless my family. I love them all very, very much and dearly. They were doing the best they could to get by, but we didn't have money and we didn't have a big, beautiful home and we didn't have a low stress and happy household filled with a bunch of laughter and love and abundance. And
I think that there's one seed that is planted in you wanting to create that freedom in a different life.
that's what led my obsession with building wealth.
Oh my goodness. I am so happy with today's person, Hannah Hammett, one of the most compelling voices in on entrepreneurship today. And it's not because of what she has built, it's because the why and how she's building it. And at a very young age, we're going to get to know more about her. I know that most people still figuring out their first career step, but Hannah has redefined what it means to win in business with heart, with a strategy, and I would say with relentless resolve. So I want to welcome Hannah. Hannah, how are you?
Good. Thank you so much, Jen. I'm so happy to be here and love what you've built and your mission that you're on.
Yes, I mean it's we are both in a mission, right? Women moving capital out there, helping other women, learning about investing in different ways, in different alternatives, right? And you have built an empire with HB Capital. And we're gonna get into the details of the of your business, but more than anything, Hannah, I think that our audience needs to know how do you found so quickly at a young age this passion of yours of moving capital?
Yeah, it was an evolution. Originally it started out of pure fear and scarcity and need and desire for freedom. When I was 7 years old, I realized when I was 7 years old, I met this very wealthy family and they had a beautiful home and a beautiful marriage and they loved each other and they had horses and and then I went back to my house and God bless my family. I love them all very, very much and dearly. They were doing the best they could to get by, but we didn't have money and we didn't have a big, beautiful home and we didn't have a low stress and happy household filled with a bunch of laughter and love and abundance. And so the easiest thing for me to equate the difference between us and them was money, right? And so that's what led my obsession with building wealth. And I read a bunch of books and I was always an overachiever in class. And at 13 years old, I read the book Rich Dad, Poor Dad by Robert Kiyosaki, who's now a very close friend of mine and mentor in real life. And that book is what gave me the bug of I need to learn how to raise capital. I need to invest in real estate assets that pay me in my sleep and build appreciation over time and aren't going to deflate. They're going to continue to appreciate with the inflation of the dollar, and that's how I'm going to ultimately have financial freedom and wealth in my life. And so I dove all into real estate, got my license at 18, started selling commercial real estate as a broker, and used those commissions to start buying my own real estate, which as an 18-year-old couldn't get bank financing, was not bankable. And so learned how to work with private investors and debt funds and all that. And then learned to I saw a lot of inefficiencies in the capital markets and wanted to solve the inefficiencies. And also I just loved being the bank. It was a lot, it was a lot of fun, right? Being the investor and the principal on the investing side was a lot of fun too. And the tax advantages and depreciation and all that and wealth, just the appreciation of the assets and the passive income is amazing. But I thought it would be really exciting to also add the vertical of the capital markets and actually be the bank and help people source the best financing for their deals, because there's the two pieces. You have the deal and then you have to finance the deal. And if you can't get the financing, doesn't matter how good the deal is, right? But if you have an amazing deal, or same thing, if you have financing but you don't have a deal, you can't really be successful either. So the two go very well hand in hand.
Yeah, that's amazing. I mean, there's so much to talk about just in that little intro about all your journey. And what I want to do is I want to start with the seed, right? On that was planted into you because a lot of people think that there's one magical formula to become wealthy. I think that there's one seed that is planted in you, whether you meet a person, whether you read a book, whether you think about an idea. And I think that you were inspired for the desire to wanting to create that freedom in a different life. How can you look back to your life and said, "Hey, I'm proud of you. You have go through this journey." What will be, if you go back, what would be those three things that you will say, "Oh my God, these was the best three decisions I did on my life"?
Well, number one was just never giving up on myself and not making excuses. I was always someone that took radical responsibility and accountability over my life and just focused on the things I could control, right? I think so many of us succumb to victimhood
Yeah.
and we say, oh, because of my childhood or because of where I live or because of my family or because of my looks or because of my gender or because of my age, like whatever. They come up with excuses as to why they can't. And I just refuse to do that. I'm like, I don't care all the things that are against me. I'm going to figure out what can I control and I'm going to take accountability for the things I can control and I'm going to find a way. So that was the first thing that I'm just really proud of. I shouldn't even be alive today, right? And I am. I'm still standing. So I'm proud of that. And then two, I'm proud of diving into real estate investing as soon as I possibly could. I knew that in order to have real financial freedom and not be a slave to money my whole life, that I had to acquire assets that would appreciate over time, that would provide passive income and cash flow in my sleep, and that would really give me the financial freedom. And time was my greatest leverage in that was get started super young. So literally on my 18th birthday, I signed up for real estate school. I didn't celebrate a birthday party. I was like studying for real estate school. So that was the second thing, and just actually acting on that and taking the leap of faith, even when I was terrified, even though I didn't have real life mentors. You know, I had books to lean on, which was amazing. But the rest of it was my own kind of grit and just taking the leap of faith. And then the third thing I would say was really prioritizing investing as much money as I possibly could into assets and not blowing it. You know, most people, even my first sale when I was 18, I sold a $1.1 million piece of commercial real estate here in Phoenix, and that was a $36,000 check. And everyone I knew at high school would have gone and blown that money in 3 days. I didn't spend any of it. I was living off ramen and living as cheap as I possibly could, which was one great blessing of being in a lower income home, as I knew how to stretch a dollar. But I took all of that money and used it to invest in real estate. And I did diversify. I tried, you know, stocks. I put some in the stock market, and then, but the majority of it I used to buy a value add property. It was just a one bedroom condo. It was what I could do, and I went in there and renovated it and just learned everything. And I was just proud of that. I ended up making probably, I think it was almost 300,000 on that property. I just sold it and I made almost 300,000 between the cash flow, the appreciation, the tax advantages over the period of time that I had it and held it. And that was only a, you know, $25,000 investment.
Wow. That's amazing, Hannah. I mean, it's I first let's start with what you mentioned, no victim mentality, to really be accountable for what you have been given and doing something about it. I love that. I think a lot of people get caught up in the stories that they tell themselves and why they cannot make it happen. And if they put the same energy in the other side, why they could make it happen, let me be resilient, let me adapt and take that energy to really create something. I think that a lot of people will become wealthy. To your point too, the fact that you didn't went and follow what everybody does with money. Let's spend it, have a lifestyle. Recently, I heard something that shocked me, and it was pretty interesting. They say that wealth is not the friend of lifestyle.
Mhm.
And it was pretty interesting because a lot of people get into investing and creating wealth for the fact that they want to create this lifestyle. But as I was going through these mentor, Barry, it's a billionaire that buy businesses. And as he was explaining how they compete with each other, it was so clear to me what you just said. I didn't want and blew the money with everything. I want to invest and put the money in assets that will grow over time to really build the wealth that will give me the lifestyle of one. And I think that a lot of people confuses that they use it as a piggy bank. So thank you for sharing those three lessons. Now let me ask you this because you were blessed with the fact that you were very driven and you are young. You started young. I wish I would have started at 13, but guess what? I started at 30 and I was like, yay, let's do this. What would you recommend for more mature women that they think they might be too late for the game?
Well, it's just like the famous quote is the best time to plant a tree was yesterday and the second best time is now, or 10 years ago and the second best time is now. It's like we are it's never too late to get started. And yes, starting young is nice because you fail faster, you make your mistakes, your lessons, and you just have time to compound. But starting later, like now, we have the tools, the technology, the resources, the marketing, the networking, and the skills and the knowledge to be able to shorten that learning curve and get there so much faster. And so I didn't have ChatGPT when I was 18, right? And so I had to make a lot of expensive mistakes and spend a lot of time to learn a lot of lessons that could be very much compressed now today if you align with the right mentors and have the right knowledge and have the resources to really grow and scale. And so if you make the right moves and you get started now and you listen to the right information and surround yourself with the right network of people to help you, then it doesn't really matter if it was 10 years ago or now or whenever.
Yes, I love that. Thank you for sharing this because I found that a lot of women they feel like they're too late in the game. I have met a lot of busy professionals that they're in their 50s, their 60s, and suddenly they look at retiring and they figure out they cannot retire. And they don't dare to invest and to venture a little bit into the investment side. And I think it's because they haven't met the right group of people, the right network, as you mentioned. And you and I met through one of the great guys in the YouTube world, Mr. Evan. And we left him. But to your point, it's surrounding yourself with the right people lead you to places that you never imagined because you want to belong no matter what, right?
Yep.
You find this group that you love and you want to evolve yourself. And that's something I noticed in you right away. You're all about growing, moving forward, financial intelligence. So when people come to you, Hannah, and I want to know more about how you look at this. When people come to you and they say, Hannah, I have some money setting aside, can you help me build wealth? What would you say to them?
Yeah, and I think it's great. And this is where being more mature and having more capital really helps because me starting at 18, I didn't have capital, right? I just had time. And so that I had 25,000 to invest and I had to work my little tushy off to try to grow that and hold it for 10 years and ended up making a good return. But if I would have been more mature and had capital where I could have taken a bigger risk up front and invested more capital instead of my time, and was using my time to just make more money to invest passively, then I could have leaned on the fruits of the labor of other people, such as me, who was out there doing the work, right? And so now, if you have capital, it opens up the door, especially if you're an accredited investor, which you don't have to be, but if you are, it opens up the door to all of these accredited investments where you can go invest in different either real estate syndications or real estate funds and make the opportunity for very large returns. Of course, there's a risk in everything you do, but it's all about, I call it the horse and the jockey, right? The horse is the vehicle. That's the real estate investment, the market, the strategy, the business plan, and then the jockey, that's the operator. And I bet more on the operator, the jockey, than I do on the horse. Like, how long have you been doing this? Have you lost anybody's money? What failures have you had? If you haven't failed, I'm not investing in you.
Yeah.
What down cycles have you been through? How much money are you investing in these projects alongside of it? And then you can lean on their teams. For example, someone I invest with, he's also a client we finance his properties on. He is absolutely obsessed, absolutely dedicated. He has an incredible team. He's been doing this for 20 plus years. He's been through down cycles. He's lost deals and he invests his own money alongside and he has withstood the test of time and offers amazing returns to his investors. So I can go in there and invest $100,000 with him, for example, and get a 20% estimated return on my money per year, get the depreciation, get the tax benefits on that money, and I do nothing. I use my capital, I invest with him, I end up getting massive benefits and returns. He keeps a little tiny piece of the pie and he's doing all the work. And he has a team of 100 that is managing this. But because he has $400 million of investments, he only needs a little piece of the pie and he's happy. And so the investors that have the capital get all of that upside and none of the work required. And they get to skip 20 years of trying to build out this massive company to be able to be successful in this business. And so that's what I would say is find those good operators, find those investment opportunities that you believe in that work for you, right? Whether it's a 5-year fund or whether it's a 10-year opportunity zone fund or whether it's a 2 to 3 year quick syndication on a smaller deal or even a debt fund where if you just want that consistent return and you don't care as much about the tax advantages or the higher upside and you just want more stability, there's so many opportunities. And the nice thing is there's so many different options for asset classes, deal sizes, investment term, return profiles, distributions, everything. And it really is just a beautiful world. And it's easier now to access all these different opportunities to really find something that works for you.
Yeah, I love that you said that because I think that what a lot of people miss is that there's going to be a size or an amount that they can invest. There's going to be a style that they prefer based on the type of risk that they're used to or the type of benefits they want from the investment. And to your point, there's many venues on how you can get into that. Syndication is just one of probably 8 or 9 other opportunities to invest passively. And to your point, if they don't want to spend the time doing the job themselves, then syndications can be a great opportunity for them. And I love syndications. That's what I do. I love, as you, I love moving capital. I don't do much of the debt side that you fully do those. And I love that, right? Because you have your sweet spot, you have other type of deals too, and a structure in equity too. But it's the fact that you find what you are more comfortable. You set up your own criteria as an investor, and they can talk to people like you. They can talk to people like me. They can talk to other women, if they feel more comfortable with women and learn what kind of opportunities are out there.
Yep.
And as you said, like you have built an entire business. You founded HB Capital. It's growing nationwide. It's going crazy bunkers bananas. So tell us about what's happening with HB Capital.
Thank you. I'm so excited. It was for so long, I was that wild entrepreneur that was trying a million different things and kind of trying to find my place, my green zone, I call it, my flow state, where I could operate in my zone of genius, solve big problems, find the inefficiencies in something I was passionate about, and then go out and solve it. And I know that our quality of life and our income also is really a direct reflection of the size of the problems that we're able to solve for other people. And then if you can solve big problems and do it in something that really excites you and that's something that you really believe in and can serve your mission, then you're going to be successful and success is just ultimately going to follow. And so that's where HB Capital, I started on the brokerage side. So I started in commercial real estate sales, and then I was using those commissions to invest in mostly residential Airbnb and fix and flip properties. And then I started my own brokerage. I also was an engineer for CAT in corporate America right out of college, went to engineering school, and then I did start 3 construction companies along the way. But again, a lot of that was chasing money, trying to find the thing that like really lit me up and made me happy. And ultimately, I kept coming back to real estate. I just loved real estate and all verticals of real estate, the brokerage side, the principal side, and the capital side. And I was like, I really see so many inefficiencies in the capital markets, and the capital markets excite me.
Yeah.
I love money, talking about money, solving problems with money, moving money, placing money, all the things around it. And I wanted a company that I could really scale on a national level and be that one-stop capital resource for commercial real estate investors and developers. And we do luxury, like residential and stuff like that as well, but primarily in the commercial side of things. So that's what led me to start HB Capital. And before I launched the company, I actually started by lending my own money as a private lender because I had been working with private lenders on my residential deals. And I was like, well, why don't I try this out with my own money and just do small loans? And I was doing $50,000 to $150,000 loans to fix and flip investors in various different states across the US, which is what stemmed the national approach. I was like, oh, I could do this on a national level. And it was an easier entrance versus scaling a national real estate brokerage, right? The licensing and regulation around the real estate brokerage side was much more uh, challenging, just a higher barrier to entry on that side versus in the capital market side. So I saw that opportunity to grow more quickly. And also I'm always on a plane. I like to be remote. So it fit my lifestyle, right? Because brokerage is very boots on the ground as far as real estate sales, whereas capital is
Yeah.
capital. You need a computer and a phone and a plane to go meet people and have different relationships. And so everything just was very much aligned with what I wanted to do. And that's what led to HB Capital being founded because originally I was just going to do a debt fund, but I really wanted to be the best available capital resource for real estate investors and developers nationwide. And a debt fund is a capital resource, but it's not the best available because the debt fund only works for certain projects, certain asset classes, certain deal structures. And so I was like, oh, that'll be a nice vertical to have in the lender database, but I want to be whatever capital you need, you come to HB and we go find the capital for you for that deal, whether it's the debt side, the equity side, both, etc. And I'm absolutely loving it. So yeah, we're growing. The goal is $1 billion in originations in 2026, and continue growing the team of just mission driven A plus high value people at our company to grow this together and do big deals and solve big problems.
I love that. I love that. I mean, it's so important. When I started in real estate, and I didn't even realize we have such a similar background. I was an engineer to corporate America and decided that I didn't want to do that anymore and focused on capital, did a lot of real estate notes, non-performing construction, development, and you know the journey, right? Up to hospitality. But to your point, one of the things that has been key success for me, and I'm seeing that on you too, is the fact of wanting to learn more and grow different areas in real estate and challenge the problems that real estate investors are dealing with. Because I have met a lot of investors that they're great at finding deals, but they cannot move capital, they cannot attract capital. And this is when someone like you, become a key factor to help them success too. And I'm so glad that you do that. For me, I do it only with my deals, right? And partnership with different operators. But to your point, it's so important to continue to grow, to learn, to expand beyond just my little zone in one state. Because once that you do that, you start learning so much about real estate, you start expanding opportunities, and I think I have seen that growth in you in a very short period of time too. I love that. I love that, Hannah. So now tell me, because I think that people get so limited on what financing mean in the real estate world. We talk about the traditional banking that give you 65%, maybe 80% if you apply with your personal credit. But how does working with a company like HB Capital give you different alternatives than just the traditional banking out there? Because don't realize that, to your point, can use private capital structure in different ways. Tell me some of the creative ideas that you guys do in projects to help solve the problems a lot of investors in real estate.
Yeah, yeah. So the first thing what we brought in is the amazing team. So all of our team members, our advisors at HB Capital, most of them have 20 plus years experience originating commercial mortgages across the country. So they have very deep rooted relationships with lots of different capital sources, lenders, banks, CMBS, life insurance companies, agency, Fannie, Freddie debt. So all those relationships. And then I wanted to bring in technology because a lot of the big firms like CBRE or JLL or some of these other well-known names are great firms, have great people, great deep-rooted relationships, but they're really behind and slow to adapt on technology because they're massive public companies. They can't just implement these new AI tools or tech stacks overnight like we can. And so I brought in this technology that has about 10,000 different lenders in it nationwide. We're adding to it every day and always updating it. And that way, and it makes it efficient for us to really be able to source the best capital because we can upload a deal, AI will analyze the deal, and it'll say, hey, these are the top 50 lenders you should send it to based on your underwriting criteria, or five, or 100, or whatever it ends up coming out to be. So, in addition to us already knowing from looking at the deal and underwriting it, oh, we know this, this lender or this lender will be good for it. We also can upload it in there because we can't possibly memorize all the different options in the country and truly know that we're securing the best options for our client. So that's been super integral to us being able to be very competitive and get creative. We do lots of local banks. Local banks and local credit unions are amazing. They'll
Yes.
usually go higher on the loan to value. They're relationship driven. They're very low interest rates. They're great terms. So we do a lot with that versus, national and regional, or I'm sorry, yeah, national banks. Local and regional tend to be better. And then we also, if it makes sense for a multifamily permanent loan that needs agency debt, then we have that correspondence to be able to do that. Or if it's a better fit for life insurance, or if it's a good fit for a debt fund, if it's a value add project and it's a distressed asset and it needs to be repositioned on a short term loan and it needs to close quickly, we go to our debt fund relationships and be able to secure that. And then, we have our relationships of high net worth and family offices and PE firms and institutional capital too, to be able to get creative on these different structures, whether it's senior debt or pref equity or mezzanine, anything like that, to really find a way to get the deal done that works for the client's needs. And every client has different needs. Every deal has different needs, right? And so that's what we are here to advise on, is how to structure that and go out and find the capital that's going to fit that structure to make the deal a win. Because most deals don't die because they're not good deals. That most deals die because they don't have the right capital stack.
Yeah, yes, you said correctly. Not having the right capital stack can kill your deal. People forget how important it is how the capital moves, not only in the project and the expenses and construction, that a lot of times you can control a big portion of this. But when it comes to the financing side, if you didn't secure your capital in your terms, just get ready. And I think this is one of the biggest challenges we are dealing with in the commercial side, especially in the multifamily sector, where so many loans became due, are coming due too, and a lot of people are struggling. Hopefully there's going to be other solutions too, and when they underwrite, they consider a little bit of that financial capital stack and didn't over leverage the properties, because you and I are seeing sad news, right? For those, but also there's still some opportunities. If you do it right, you can always go back to someone like you, right, in the mezzanine world. Hey, how can we redo the capital stack on this? Which I love it. I love it. Now, I know that there's a lot of challenges out there for real estate investors because the market have shifted, right? And everyone knows that there's a lot of speculation what's going to happen, what is not going to happen. One of the things I love about the capital side is you get to invest in the market, but because you invest in certain way, you can always protect the capital from these variable weird times. So what is your advice for people who are investing? I'm going to call it the paper side, right? The financing and all of that, to look at these deals and protect themselves during uncertain times.
Yeah, I mean, I always feel like the greatest opportunity lies in the most uncertain times or the times of fear, right? And what's the quote that says, be greedy when others are fearful and fearful when others are greedy. And interest rates and property values have an indirect relationship, an inverse relationship. So if interest rates rise, property values drop. If interest rates drop, property values rise. But regardless of if we're in a rising interest rate environment or a falling interest rate environment, there is opportunity. And when we're in a rising interest rate environment, there is more opportunity, right? Because you get to buy the property at a lower basis and there's more appreciation potential for upside versus because the interest rates can change over time and they will, but you can't change what you paid for the property. And
Yes.
so if you way overpay for a property like in 2020, which is why investors are upside down right now because they way overpay for the property, buying it on a 2% interest rate, assuming that rates were going to stay at 2% forever, which is ridiculous. That's just not reality. That's never happened in history, right? Then versus now, where people are being able to take advantage, those who didn't get caught up to those who weren't greedy when other people were greedy and they were fearful when other people were greedy and they're like, hey, I'm going to sit on the sidelines, I'm going to kind of wait this out, I'm going to be very cautious on this because I don't believe that interest rates are going to stay low like this forever. Let me wait and not lose everything because I'm not going to be greedy. I'm going to be patient. And now they're the ones being able to take advantage of all this distress in the market, and they have cash that they have on the sidelines. And they're like, okay, now we get to go in, get really great prices. We have higher interest rates, but now we're in a falling interest rate environment, so they're going to be able to capitalize on the upside of that because they were patient and because they weren't greedy, and now they can be greedy now that other people are fearful. So that's how I've always played the approach, which is why I ended up getting into lending back in that time because I had been saving up money to take down my own large multifamily project. But same thing, I was like, this doesn't make any sense. These numbers do not underwrite. My engineering brain is never going to allow me to buy something at a zero cap rate or assuming a 2% interest rate for the next 15 years. And so that's when I was like, well, let me lend this money on short-term loans, take
Yes.
advantage of the everybody's trying to get financing and be patient with my capital on the principal side. And then now that there's more opportunities that where things actually underwrite and make sense, I can jump in and get excited about investing now. So I'm excited. I'm
Yep.
excited. I don't ever like to see people lose, of course.
Yes.
But market cycles are going to happen forever no matter what. And it's just about having the right skills to be able to make the right decisions as best as possible because we don't have a crystal ball either as
Yeah.
far as timelines go, but as best as possible and as conservatively as possible to take advantage of the opportunity that comes from the distress of other people being greedy.
Yeah, yeah. I love that you're sharing that. And I love that Warren Buffett always remind us about the greediness, right? He's always say, be patient. And I think that especially for him, he comes from a perspective of playing the long term, right? Thinking about the project in the long term. To your point, we have to determine who we are as investors. Sometimes we can play the short term, take the wave in the right way if we have the proper skills. This is when people have to be very skillful when they're lending money because also they can get hurt. But to your point, if you're looking at the project, reach out to your friends that has invested in the past, that have gone through the cycles, talk to the operators, understand what's going on during uncertain times so you can make better decisions because your options on an exit strategy gets very limited when you don't buy right from the start and things can change pretty quick not only from the financial perspective but the value of the property perspective, the preference of the customers too, the affordability, it's another factor too. So as investors you have to continue to learn every day, and I love that you are always in that mindset, let me keep learning about what's happening across the entire market. So um, I just get geek out in the capital stack and markets
Me
and all of
too.
that. Like you, yeah, those engineer minds, man.
I know. I dream about it at night. It's a little crazy.
Yes. It sounds weird, but sometimes for me, seeing a spreadsheet is like, oh my God, let's play. Even if it's automated, I want to understand because it allows me to see the problem that I'm about to solve. And I don't know if this has happened to you, but recently I was reached out by a lot of investors because they're underwater, as you say. And I'm having fun with it, not because they're in a pickle, but because of all the opportunities they have not been able to see. And when I say opportunities in the world of capital, to your point, spreading your wings, beyond just real estate. Learning about other business types have allowed me to help them restructure their business. Maybe not their financial stack, maybe not the valuation of their project, but bringing a business opportunity aligned with real estate that allows them to adapt these projects to make it profitable, including partnering up with addiction recovery, which is my passion with, nonprofits or other companies. Have you seen that in the commercial side a lot? I have seen it in the residential side.
See, which aspect?
Like, for example, a lot of people reposition their real estate asset into a different type of business in order to cash flow it.
Gotcha. Are you saying like converting an office into,
Correct.
multifamily or behavioral health? Yeah, yeah,
Correct.
for sure. I think we're seeing a lot of adaptive reuse and just repositioning assets and pivoting. I don't know if you've ever read the book Who Moved the Cheese, but
Oh,
it's
yeah. A long
yeah,
time ago.
I know it's such a short book, but basically it's so many people fail to realize that someone has moved the cheese and they
Yeah.
keep going back to the same feeding spot to eat the same cheese. Like, right? Imagine you had cheese in your fridge a year ago and
Mhm.
it was there consistently, but for the past year, you go to your fridge every day and there's no cheese, but you keep expecting that the cheese is going to show up there. But when in reality, someone moved the cheese into a different refrigerator. So being able to pivot and adapt quickly and understand patterns. And I think that's been one of my gifts is I can see very clear patterns in history, in my behavior, in my life, in my decisions, in the economy, and all these different things, and understand, oh, the cheese has moved. Let me pivot immediately and follow where the cheese is, right? And not being so tied to a previous thing that worked because the world is ever changing, especially right now. Everything is changing at a rapid pace and not having the ego around, I don't want to lose on this, or this is what's worked for me, or this is what I've spent my last 10 years of my life doing. It's no, pivot. It's okay to pivot. The cheese is moved. Let's follow the cheese. And we're seeing that in the commercial real estate asset classes as well. Office vacancies are 20 to 22% nationwide. That's a lot,
I see.
right? And yet I still see commercial brokers, some of them are still trying to sell office and they've been struggling and struggling to make a dollar for the past 3, 4 years. And they're still, well, I'm an office broker. Like, well, maybe you should, the cheese has moved. Maybe you should consider either finding something in office reuse, right? You help advise people on how to convert their offices into something else. Or maybe you explore going into a different asset class altogether or whatever, just being able to pivot. And same thing with office building owners. Maybe instead of just listing it for lease for 4 years and hoping that something is going to change over time, maybe it's time to start getting creative and understand that there could be a better use for this building. And so, yeah, I think we're seeing that a lot, but it's risky. You have to have the right teams, you have to have the right knowledge, and you have to have the appetite for risk to convert these things into different uses. But that's where a lot of upside is.
Yeah. Yeah, for sure. That's where my brilliance come. That's what I love to do when I see an opportunity like that. It's like, yay, a big problem.
Love
Let's do
it.
it. So it's that ability to adapt quickly to what the environment is asking. I think that a lot of people forget the micro and the macro, how they work together with the real estate world, and they miss these opportunities because, to your point, they're not looking at the cheese. The cheese moved a long time ago. Go and smell, go follow that cheese. And if it's not you who can do the change, partner with someone who can. And that's what I love. I mean, there's so many willing people out there to make it work. And this is when it gets really fun, right? The capital stack, partnership, owner finance opportunities, as you mentioned. I'm super excited about the uncertainty in the market. I'm sad for a lot of people that they're gonna lose a lot of money. It breaks my heart, but it's part of the game too, right? We
And
all lose
I've
money at
lost
some point.
a lot of money too. Like, it's like when I was doing loans, it's not all sunshine and rainbows. I still have
Yes.
hundreds and hundreds of thousands of dollars of my own capital out that on assets that are not worth what I lent on them and
Hmm.
borrowers that are just above bankrupt, right?
Yeah.
And I don't dwell on it. I don't even let it upset me. I'm like, okay, I could have done better. Could have underwrote these assets better. I could have not lent as high as leverage. I was being greedy. I was charging too high of rates and just not underwriting properly and lending money to pretty much anybody with a heartbeat and an APN number, which worked fine for a period. And then it didn't when everything shifted in the market. And that's fine. Instead of dwelling on it, I'm like, okay, how do I learn from this mistake? What can I do better? What can I do different? What am I going to change? And let me just take this energy instead of focusing it on the losses over here, take it, learn my lessons, and go implement those better skills over here and do it better this time, and then make focus my energy on making a lot more wealth and solving big problems for people. And so I think that's it is it's okay if you lost a lot of money.
Yeah. Yeah.
You didn't lose your skills.
Yes.
And when you have those skills, you can make back that times 10 much more quickly because now you have the skills and you're a much more savvy investor or operator or business owner, whatever your field is, and you can go make that money back. And so that money that I lost, it gave me the skills to go literally 10x that in a very short period of time instead of just dwelling on it and fighting to chase down that money, right? I always try to be cautious of tripping over hundreds or thousands or millions to pick up pennies or
Yeah.
dollars, right? Don't trip over dollars to pick up pennies. And so trying not to get so lost in the trees that you don't see the whole forest
Yeah.
and just cutting your losses, letting go of the ego, letting go of the shame or the guilt or the fear, or the scarcity, and understand there's more to be made. Infinite is fake, or money is fake. It's infinite.
Yeah.
Just
Yeah.
more of it. So yes, it is not fun to lose time, money, and energy in anything ever.
No.
But if you don't waste your energy trying to pick up those pennies that you've lost and focus on how can I do be better and different and make more times 10 and understand there's abundance out there, then it's really not that painful. It's not as painful. It's only as painful as we make it.
Yeah. Yes. I love that you said that too. And sometimes it bothers me the few times that has happened. It's like, oh my God, it bothers me. But then I become this a special writer that write this journal with 100 lessons of what to do, what not to do. But also take the wisdom because sometimes I have bet in the wrong operator, and I have say I'm gonna say this, and I regret a lot of times. And people is like, oh, but you give that person a chance. But more than anything is if I would have not give the chance to this person where I lost money, I would have never done this second thing, third thing, fourth thing, that 10x what happened here, right?
Exactly.
And that's what I love about the abundance mindset, not getting stuck in a loop that do not allow you to move forward. So capital moves forward. There's no way it moves back. There's no way it stays stagnant. If it stays stagnant, it dies. Whether
Mhm.
it's the same amount or not, but movement for capital is important with wisdom, with more strategy allows you to grow faster, as you say. So
Yep.
I love that. I love that,
Yeah,
Hannah.
but it's like me. If I didn't start private lending my own capital and if I didn't lose a lot of money from doing that, I would have never started HB Capital. And now
Exactly.
HB Capital is worth far more and produces far more than the money that I lost from that lesson. So I just see it as I either win or I learn. Like I really don't believe in failure. Unless you quit and give up, then you're a
Yes.
failure. But if you learn from it and you go create something better, or at least put your energy into creating something better and learning from those mistakes, then there is no failure. And it's like school costs money, right? Lessons cost money. That's just the
Yeah.
way everything costs money. And you just use those lessons to be able to go create more.
Yes, and talking about creating more, I know that you are expanding to in different types of capital from self-directed IRA to other areas. Tell me what's evolving in HB Capital to tap into those markets that a lot of people still not familiar that they can move that money and invest in real estate.
Yeah, so I think my mission is to serve both sides. I want to serve our operators, our sponsors who are raising capital, both debt and equity for their deals. And then I want to serve high net worth investors that maybe have a lot of income, but they're not operators and they want to invest that capital and make big returns from it. And so, and I'm on both sides. You know, I've been an operator and I'm a passive investor. And so, in a way, I'm just sharing the lessons that I've learned as I continue to try to grow my own net worth and my own portfolio, and then share those lessons that I learned along the way on how do I save on taxes? You know, how do I take advantage of the legal they're not even loopholes, the legal tax law that is being put out for us to be able to lean on to be able to compound our wealth quicker, right? And then I want to share that with other people. And so personally, I've recently, over the past couple of years, learned about being able to invest in self-directed IRAs or, self-directed 401ks or self-directed Roth IRAs to be able to invest in these real estate development projects or debt funds and syndications and be able to not have to worry about ever paying taxes on those gains as long as the money just goes back into the IRA, which is awesome. Like that's a tax strategy that's amazing and it's provided to us. And if we have the education on it, then we can do that. And I've even recently learned about the mega backdoor IRA, which lets you do $69,000 a year, which grows a lot faster, right? At 7,000 a year, you're like, ah, oh, that's fine, but it's not that exciting. 70 grand a year, that compounds pretty quick. And you can
Yes.
take that money and put it into real estate investments tax free and make 20% on the money and then never pay taxes. Yeah, sign me up for that, right? So I want to help people understand and learn those things. I'm not the expert, but I partner with the experts in each industry and say, hey, now you can serve and help. You're the expert, and then we can all kind of win together and help each other out. So yeah, that's a creative strategy that I've recently learned that I absolutely love. And then just the differences between like what's an opportunity zone, right? That's another way to not ever pay taxes if done properly on that real estate investment, the returns from that, or a debt fund which offers, just it's a debt instrument, so you have more consistent passive income, but you don't get the tax advantages. But if you're doing it through an IRA, then you do get the tax advantages. Or a syndication versus a fund. What's
Yeah.
the pro and con of each one? A fund, you're diversified. There's lots of assets pooled in it, and if one asset goes bad and all the others do well, your money's still protected. Versus a syndication, you might be super excited because you love that project, you really believe that project, but if that project goes bad, there's more risk to the money. So neither one is better or worse. They're just different, and everybody has different ideas of what makes the most sense for them and what they believe in the most. Some people don't like funds because they want to know exactly what asset they're investing in and have their eyes on it, and like I believe in this one thing, and they feel like they have more control over that, which is great, and that's why there's so many different opportunities or different asset classes, right? Or different waterfalls and prefs and all these different things. And so it seems overwhelming and there's a lot to know, but it's if you have the right people around you that are experienced and have the right relationships and the right values, then you don't have to know it all. You just have to know the right people and that you trust to be your advisors. And that's something I learned from Robert Kiyosaki. He has all these different things going on, all these different investments all over the world in all different asset classes. And he's like, I don't know it all. I have the right advisors who do, who are specialists in their field, and I trust them with my money and with my life, basically. And that's all I need. I don't need to know every single detail about every single thing that it takes to run my life and my wealth. And so that's kind of the approach that I take to is do what you do best and hire out the rest.
Yeah. Yeah, that's for sure. Papa Kiyosaki teaches a lot.
Oh yeah. Papa Kiyosaki.
I have to send that message to him.
I love
So,
it. I'm gonna call him that. I'm texting him
yeah.
today. We text him back and forth. I'm gonna start calling him Papa Kiyosaki. He's gonna love it.
I mean, rich dad, poor dad. It's just super aligned, right? It's he has changed so many lives by writing that book, and I think it's wonderful. I mean, me being one of those person too, one of those people. So, Hannah, if people want to connect with you, what is the best way to contact you, your company, or your advisors?
Yeah, so my Instagram, I'm very active on there. It's at Hannah B Hammond, Hannah. B is in Beth, Hammond. And my social media managers are in there, but I see all the messages, so feel free to reach out to me on there. And that'll have my link tree that has my personal website, my company website, and all of that, and all the emails and everything. But yeah, if you have a financing request, you can just shoot me a DM in there. We'll get your email and get you to one of our advisors too.
Awesome. Well, thank you, Hannah, for sharing a little bit of yourself, your life, your experiences, and your knowledge in the capital market. So we appreciate that, and I know the audience will love it. Thank you for your time. Thank you for being with us today.
Thank you so much, Jen. I appreciate you. Happy New Year.